Hey everyone, wanted to give you guys another charting video. This one's going to be a little different. I'm going to do a RSI explanation and what that is. So again, you're going to want to go to stockcharts.com. It's free to use. It's a great tool in my opinion. You're going to come right here to input a stock. And today we'll look at Under Armour. So we'll just put UA, being complicated. Under Armour. So as usual, chart comes up like this. So I'm gonna basically talk about what's up here, RSI. What RSI is, or what it stands for, is Relative Strength Index. It's a momentum indicator, basically telling you guys if the stock is overbought or oversold. And what that means is when it's red down here, it's oversold. Or if it's just low, like right here, it's oversold. And if it's up high, or if it goes above this line and it's in the green, it's overbought. So and then you have the ranges here, basically 0 in the middle, or I'm sorry, 50 in the middle, 100 and then 0 at the bottom. Now, what this is good for is if you're looking to get into a stock, um, typically with a little bit longer horizon, not always. I mean, you could buy in whenever with this, but typically with a longer horizon, if you bought right here, right as it's coming out of this oversold range, you would have got a rally coming up. And if you see on the chart, it mimics a rally coming up. So it starts here, and then it starts going up until now it's getting closer to overbought because it's a little high, right? And you see right there, directly below it is this peak. So what happens is it starts going down in kind of this neutral territory. And same thing down here, it's kind of staying in this neutral territory. So it's not overbought, it's not oversold, it's just neutral. And right now it's just kind of staying in that range, and it's not hitting any new peaks or new highs. Now let's look at another one. Let's look at Caterpillar, CAT, big company. So you see right here in this range, it's a little overbought. You saw a little bit of green, and as you can see, it jumped up really sharply. So it came from a oversold range. Basically, probably someone looked at this, and let's say before all of this happened, and the stock was really low right here, and there was a dip right here, and they thought, you know what, this stock's looking really oversold. I bet people are going to start buying it soon, so I'm going to buy in. And then sure enough, it shoots up, and now it's in the oversold or overbought category. Now you'll still see it kind of go up. It won't make any big moves. It'll kind of consolidate upwards, and then you'll still see these peaks kind of high. But as it starts coming down towards the center, then this stock here comes down a little bit and flattens out. Now, if you're looking farther back, there's another peak here where it's overbought, and then it gets overbought, and then it goes down, it sells down. And then there's another peak back here, it's overbought, and it kind of does the same thing. It'll jump to a top, a peak, and then another peak, another peak, and it kind of does the same thing here. It goes flat, and then it comes along here, and it goes down, and it kind of comes back to the center, and it just consolidates in here. Now, I use this a lot when I trade, even with penny stocks. And if I see the stock like right here, I'm not buying that stock because 90% of the time it's going to come down because it's overbought. It's too expensive. Now, if I come into penny stocks and I see it right here, it's oversold, I'm going to do one of two things. I'm going to look for a catalyst in the fundamentals. So I'm going to look for any articles or anything like that that might be dragging it down, making it come down. And if I don't see anything bad, then I'm gonna check a longer frame chart to kind of see where the stock's been and going and make a judgment from there. but I'm more likely to buy from here to the neutral middle is my range typically. If it's above the neutral area, above 50, it's going into 60, 70, 90 like you see over here, I'm not going to buy it because it might have a little momentum coming up, but it could easily just hit a peak and be overbought and come back down. So I'm typically trying, like I'm a cheap guy, you know. Let's put it simply. I'm cheap. I'm very cheap. I don't want to pay a lot of money for stocks. I want to buy them very cheap and inexpensive and let them run up and get expensive when other people want to start buying them because they're interested, and then that's when I sell. I want to get out. I want to let all the other people, you know, drive it up and worry about that. I'm going to buy it when it's cheap. You know, I'm gonna save my money. And that's how you get consistent gains. Is because you buy low and sell high. Like one of the most uh, regurgitated lines when it comes to doing stocks: buy low, sell high, diversify. You know, those same things you hear over and over that your grandpa could tell you about. You know, stock charts and all that. Doesn't mean that they're wrong in saying that. It's a good strategy. It's a very simplistic strategy. You got to have other factors though that go into it when you want to make these trades. So we'll just do one more. Try to keep this quick. Oh man, I wish I could think of one right now. My brain's kind of slowing down. Let's do Procter and Gamble. Let's see if I can fucking spell it today. Let's see, PG. Is it PG? Here you go, Procter and Gamble. Procter. Okay, yeah, I'm awful. All right. Anyway, so this graphs hasn't looked like it reached overbought, oversold. It's kind of bounced around the range the entire time, but you can kind of see different factors. Um, as this is climbing up here in the graph, you see, it looks like it's hitting these peaks here, so it's not having any breakouts. And you see a drop and it kind of consolidates and it still goes up a little bit at this high peak, and then from there you see it drops all the way down to the low end. Now it's in oversold territory, and look how much it dropped right there. And then as you can see, it came back up. Same thing here, it came back up, kind of stayed the same, and then it dropped down again in this lower territory. And the same thing down here, you see it drop down low again. And then in the graph, it starts coming up and it starts staying in this mid-range and consolidation. And the same thing here, it's just going sideways. It's not going up and down or anything. So depending how you look at that, you guys can use this as an additional strategy to drawing trend lines, and additional strategy to using moving averages. You know, these are all just strategies for technical analysis that can help you make decisions. So the more you know, the better. But ultimately, when you start charting, you guys will have like one or two uh, indicators or whatever that you like, and you kind of stick to them, and that'll be essentially a strategy. Pretty much how this is set up, excluding candlesticks, depending on if it's a daily chart or a monthly chart, whatever. I will use RSI, I will use MACD, which I'll do a later video on, and I do use uh, moving averages, the 50 and the 200 day you see here. So I'll give you guys more on that. If you like this video, just like let me know. Leave a comment down. Click like and subscribe, help my channel out. If you have any information, if you want to add to this, or if there's something you think I missed, you know, just feel free to let me know. Keep this information coming, all right? Just have a good day.